Dhiraj Agarwal joining us this morning. He's MD, Ambit Investment Managers. Dhiraj, great to speak with you as always. Thank you for joining us this morning on NDTV Profit. Let's start by looking at big concerns for Indian markets. Do you think that what we're seeing in the US right now, bond yields spiking the way they have, and now uncertainty about US economy coming back in terms of how wide that deficit will be if their budget bill goes through, is that going to be a factor that's a headache for us for the next few weeks?
I think the bigger headache for us is our own earnings growth, right? We tend to focus on global factors a lot more when the environment turns weak. But sometimes and very often the story actually lies within. Um, Nifty earnings growth for March quarter looks like it is going to turn out at roughly 5%, 4% or 5%. It's been sliding every single quarter for the last 4 quarters. There is a hope and optimism that it will rebound into the next financial year. But that's a little bit of a hope. So I think we need to worry a little bit about why are our earnings growth slow down, and do we have enough triggers for them to bounce back? Um, the macro noise or the noise coming out of the US or the sound bites coming out of the US, whether it's bond yields, whether there is risks of US slowdown, etc., will obviously also matter. But I'm more focused on our own micro at this point.
No, just on that point, Dhiraj, you're not liking what you've seen in terms of corporate results, because some commentary saying that it's better than what was expected, even worse was expected.
I know we keep on lowering our expectations and hoping that the results will be better than expected, but it doesn't change the fact that the numbers are just 5%.
Yeah.
It doesn't change the fact that FY25 earnings growth is 5 or 6% or 6.5%, and markets are trading at 21 times P multiples. Does not justify. So in the near term, markets can rally a bit more on narrative. I mean, that's obviously possible because there are a few positive narratives to play, right? The potential conflict with our neighbor is over. There could be potential trade deal with the US. There'll be potential rate cuts in India and perhaps in the US as well. So there are, I mean, there are these macro sound bites, but eventually, if you take a 12-month call, earnings will have to play through. Otherwise, we have a problem.
Dhiraj, good morning. Niraj here.
Hi, Niraj.
Sorry, did I hear you say 5-6% for FY26 or that was FY25, right?
No, 5.6 is FY25. The current consensus estimate is, I think, 11 or 12 for 26.
Right.
But then the consensus estimate for FY25 in March was also 15%.
Yeah, that's true. That's true. but Dhiraj, could this time, I'm just thinking out loud, right? Trying to play the devil's advocate. Could this time be slightly different in that? And we want it to be, but in that, because we know that the first half has a base effect because the economy went through a tailspin because of elections and unseasonal monsoons in FY25. RBI is kind of on the route to cut. And even if globally yields are higher, in India, the inflation picture is looking pretty okay, right? So could a tailwind of 2 or 3 things maybe lead us to do better than 11% in FY26?
So I'll break this into 2 parts. I mean, as you rightly said, we will see some positive sound bites coming out in the next few months, right? So RBI will cut rates for sure, looking at our Indian inflation scenario down to below 4% now. US should also cut, so that should help RBI in their decision-making process. Some kind of a trade deal will get signed, which will be interpreted positively. UK FTA signed. All these will result in a hope and expectation of an earnings rebound at some point of time. And it's possible it might. I mean, it's very difficult to crystal gaze and say, will the earnings growth rebound in the second half of this year or not? But I'm always a little skeptical about the second half earnings rebound. I mean, not from now. It's been my experience since mid-90s, when in weak economic environment, we all used to write our strategy reports saying first half will be weak, second half earnings will rebound. So sure, I mean, it's a perennial hope of festival season in the second half earnings rebound. I'll just take that with a pinch of salt. So it's possible that in the near term, market tends to do well because of hope, expectations, and positive macro sound bites. But the real test will be by September quarter, what the earnings are doing. And at this point of time, all our channel checks are suggesting there is no pickup in demand. I mean, across the board.
Okay. Okay, that's okay. That's not good news. So then, therefore, let's presume, Dhiraj, it's going to be a very, very bottom-up market. It usually is. This time around, even more so, right? And we've seen signs of that. The last 1 month, the broader markets may have been okay in a bit of an uptick, but defense kind of scored dramatically due to idiosyncratic reasons. Some other pockets did well. Where is it that you personally feel that, despite the larger sluggishness, these pockets are the ones which could show earnings growth? We'll discuss with valuations later.
Yeah, so in fact, I think I mentioned this on the last time we discussed, we had a conversation as well, that I'm not really actually seeing a sectoral theme. So within every sector, you will find a few companies which will deliver above industry growth, and the stocks will tend to do well. Bulk of the companies will deliver in line or below industry growth, and the stocks may struggle. Uh, Obviously, building into fact that the companies which are delivering above industry growth are not exorbitantly expensive. So even rules, as you rightly said, even rules exorbitant valuation companies out for the time being. Because in a tougher environment, say, tougher environment for India still means 6% growth, right? So it's not 2% or 3%. It's not recession. A tough environment means 6%, six and a quarter, 5.75, which obviously means we are still growing, and hence a few companies will grow faster than the industry growth rate. So it'll be stock picking market, no clear sectoral trends. Every sector will see winners and losers. So there'll be high levels of dispersion in stock price performance within a sector through this year. That's what my expectation is.
How do you pick the bottom-up story, Dhiraj? It becomes very, very tricky, from for everything you've described. And I concur with you 100% about this second half of the year boogie. I think we heard it all of the first 2 quarters last year. And then we're yet to see that emerge, and we're sitting and analyzing Q4. But how do you pick now? What are the filters that you would apply for that bottom-up strategy? Because, there is no real glimmer of hope from what you're saying in the corporate results either.
No, you have to go down. It's back to basics, right? So when the easy thematic investing stops working, you have to go down back to basics. So you have to look at market share, margins, top line growth, balance sheet quality, and the balance sheet parameters like ROE and ROC. It's back very, very basic research. So it's tough because winners will be harder to find in a tough environment. It's actually easier because it's back to basics. I mean, just one theme running away. I mean, there could be one or two pockets like defense, as Niraj mentioned, is doing well. The valuations are a bit expensive, but it's a very, very strong theme at this point of time. But in general, you'll find the hardcore bottom-up, basic research and basic analysis will work again. So analysts are back in job.
Okay, analysts are back in job. I don't think they ever left. I think we need to ask the analysts, the ones who said Vodafone is a great buy, IndusInd worst is over from the last 6-7 times. But all right, that's a discussion for another day. My question is that in themes as well, and I know I'm pressing back on this, do you think that the consumption story is yet to play out, or is that again a mirage that has been chased for the last several quarters?
See, at this point of time, consumption is weak, right? I mean, consumption stocks by and large have not done well. And we have heard management commentaries about a rural rebound for 7 quarters now, 6 quarters, 7 quarters now. But I don't see any data supporting it. I mean, I don't see any pickup in soaps volumes or toothpaste volumes or two-wheeler volumes, etc., supporting rural recovery. So we can all be very optimistic about rural recovery. We can all be very optimistic about tax cuts will filter into increased consumer demand. But I'd like to see hard data. I mean, I like to see volume pickup actually panning out, which is not happening. So consumption has been weak. It's been a bit of a worry. And at this point of time, I'm not seeing any revival. I mean, if it happens 1 quarter, 2 quarters out, we'll wait and watch.
Dhiraj, the jury is out though on information technology, right? Suddenly, I mean, it's an interesting note from JP Morgan today, wherein they are saying that maybe the cancellations are not that high, maybe the business might actually return. And I think Macquarie, the earlier time, pointed out that IT service companies might actually do well versus product companies, because large corporations will require IT services to help them navigate through this whole AI jungle. Are valuations and growth in your favor when you're betting on IT right now? Or is there too much of uncertainty out there in that bucket?
See, within IT services also, okay, if you see the industry as a whole, as a whole now is a 7 to 10% growth, right? Sort of an industry. And it's been like that for a while and it hasn't changed. So it keeps on fluctuating a little bit above and below that average. But there are companies which are able to deliver 15 and 17. There are companies which are not even able to deliver 5 or 6. Overall environment is likely to stay tough. I mean, whichever way we cut it, all the global happenings or all the events in the US is bound to result in some economic slowdown. Now, whether it is bears say it'll be a deep recession, bulls say some economic slowdown. But I think there's nobody saying that economic growth can pick up in the US in the near term with all the events which is currently unfolding. Which is usually a tough situation for IT companies because discretionary budgets are amongst the first ones to get cut. Having said that, a few months ago, after the deep crash, the valuations had become very, very reasonable, but then all the stocks have rebounded from their 20-30%. So IT, like all other sectors at this point of time, will also be a space where you'll have to really, really pick and choose. And the current valuations with the current growth outlook, I don't think the whole sector will do well.
Unfortunately, because we can't talk stocks with you, I was kind of forced to ask you about whether the theme at large. But I get your broad point, Dhiraj Agarwal, and I think that's an important point. And remember, viewers, Dhiraj in the past has spoken to us about how product companies in India might actually do well. So bear that view in mind for sure. Dhiraj, great talking to you as always. Thanks much for taking the time out and speaking to us.
Thank you, Niraj.
All right.